The Actor CEO Podcast, Episode 27.
Going up. You're an actor, but you're also a business. Take control of your career by learning how to manage it like a boss. Be driven, be responsible, be in control. Be an actor CEO. And now, your host, Mike Moreno.
Hello and welcome to the Actor CEO Podcast. Thank you for joining me on this journey of learning, exploration, and dedication. If you want to keep getting tips and tricks from industry pros, established actors, and hardworking artists, make sure you subscribe to this podcast. That way, when you're on the go to your next audition, commuting home from work, or at the gym, you can take a moment to listen and get some serious insight into building a better career by becoming an actor CEO. Hey actors, what if I told you you could take acting class with Kevin Spacey or Dustin Hoffman? You'd freak out, right? And then you'd ask, okay, how much? Masterclass is an online learning service that gives you access to acting classes with these master actors for just $90. You can't even rent rehearsal space in New York City for that much, and you get hours of exclusive footage you won't find anywhere else, worksheets and templates, and a community forum to connect you with other passionate performers. This is access you can't find elsewhere, and the knowledge that these two titans of film and stage deliver in these courses is priceless. Click the link on the homepage at actorceo.com or find it on the resources page at actorceo.com/resources. Masterclass provides phenomenal content, so don't miss your chance to learn from the greats. Now back to the show. Dominic Comperatore, thank you so much for joining us on the podcast today, man. I really appreciate having such a unique perspective on the show. I think it's going to be very helpful.
My pleasure.
So let's cut straight to it, right? So you're an actor living here in New York City, a fine one at that. I've had the pleasure of working with you, but you're also a tax preparer, which I think is extremely useful. Being an actor, understanding the tax side of the business and being able to stay on top of that. But you also help other actors too, which is what we're here to talk about today. So actors have a bad rap, I think, about being money conscious and handling that tax side of the information appropriately. Oftentimes, we're working so many other jobs that it's tough to even remember that we're also an actor and we can use that information and claim a lot of those expenses on our tax returns. Have you found that there's any other misconceptions that people have when it comes to thinking about themselves in the tax world as an actor?
Well, I think the biggest, well, not necessarily a misconception, but the biggest obstacle to actors when it comes to their taxes is they don't want to get involved with it. It's kind of ironic because actors, at least the ones I've worked with, tend to be a pretty darn smart cross section of the society. They're great at figuring out problems. They're great about taking. they're great at taking initiative and really rolling up their sleeves and getting things done. However, when it comes to taxes, they treat it like you've just invited them to watch you make sausage. They just say, you know what? I don't want to see how it's done. Just here's all my papers. Just call me back when I got to sign.
Right.
And that's where they leave it. And that's where most actors really do themselves a disservice, is by not getting involved enough to care about how it's done, because how it's done is not just those couple hours in the tax preparer's office. It's what they're doing all year long to do better for themselves. And I think that's the area where actors really can and do need to do better.
Right.
And I think one of the reasons why there is so much inhibition in rolling up their sleeves is most people look at taxes as something like, well, I kind of should know this, but I don't. And there's sometimes some shame involved in that. And, what I like to tell my clients is, look, there's a reason you don't know this, and it's because it wasn't taught in high school. Exactly. And it really needs to be. Right. But the difference that makes it even more important for actors than it does for their parents, if their parents are civilians, is that most people in traditional jobs don't spend nearly as much on their career as we in the arts do. And they don't earn nearly as much. So that if people outside the industry are making mistakes on their returns, it's not a big deal because they can write a check for that mistake. Actors are in a different pool, and so I think it's incumbent upon us to know more about it than the average citizen. So that's where I encourage actors to really get involved and try and understand as much as they can how the process works.
Man, I think that is, despite how heavy that message might seem, I think actually am very motivated by that because it gives me responsibility for what I do as an art. And the fact, not only responsibility, but it gives me also justification and like confidence. It's like you were endeavoring on this project of creating a business, of a whole thing. Mm-hmm. You are an entity. Yeah. And not many people get to do that. They work for somebody else. You are working for yourself because you're building something. And the IRS and, the way that you conduct your finances as that business is all actually totally respectable and true. And there's a system built up to help support you in that. You just got to know how that works and use that perspective and take that responsibility of yourself, not only as an artist, but as a business. Yeah.
Yeah. I think artists should take that side of the business side of things as seriously as they take the artistic side.
Yeah, absolutely.
And
absolutely.
it's amazing how much you see, and I see this in my office when actors come in, is that often goes hand in hand. The people who are doing well on the business side are often doing well in the creative side as well. I think part of it is, when you sort of get a handle on that and you start to get organized, it gives you a certain peace of mind that carries over into your other endeavors. Because, neurotic and anxious is not really a great selling point in most careers. And it's, not in ours either. And right. I find that learning the basics, and taxes, I consider basic knowledge of that as the first rung on the ladder towards what I call financial competency. Once people get a grasp of that, often they think, oh my gosh, you know what? I can understand that. I am capable of doing better in this area. And therefore, since I've done that, maybe I can look to the next level, like buying a home, raising a family, starting my own business.
Right.
It builds confidence in that way. And also it is the platform upon which all those other endeavors are built.
Absolutely. Absolutely. And all those other endeavors dive into the tax code in their own sort of unique way. And there are advantages to those endeavors. So knowing that will help you move forward and towards those next goals.
Correct.
Yeah. Yeah. So, okay. So Dominic, let's get some details, right? So, what is from your perspective, since you have this unique perspective on the acting business, what are some things that actors can keep in mind in their everyday life throughout the course of the year that helps them stay in front of their tax preparation?
I think, if there was a one note I would give overall, the biggest thing is keep the receipt. Keep the paper, keep the actual receipt. I have a lot of actors who think it's okay just to charge things on a credit card and they throw the actual receipt away. And they say, oh, well, at the end of the year, my credit card company sends me this summarized statement of everything that I spent on this card. I use this all for all my acting expenses. And therefore, see how smart I was? I didn't have to keep all that paperwork. This is so much simpler.
Right.
The problem with that is, if you buy resume paper, and your resume paper is deductible, if you decide to buy that at Target, you ring it up at the cash register, they hand you a receipt, and that paper receipt says Target resume paper, $10. You take that and you throw it away. End of the year, you get your credit card summary, and the summary says Target, $10.
Right.
You take that into an audit, and the auditor will say, well, what else could you possibly have purchased at Target for $10? And you will lose that item. And not only will you lose that is going to bring into question everything else you've written off. So keep the actual receipt.
That's
And
terrifying.
yeah, and so keep the actual receipt. And there are a lot of systems for this. I've seen these online programs where you can enter everything in at the end of the day. There are these accordion files.
Right.
There's binders you can buy, and
Scanner
all of these
programs on your phone, things like
scanner
that.
programs, all that stuff, and all these systems work great for about 2 weeks.
Hmm.
After 2 weeks, you're in a rush, it's raining out, the receipt's only for $2.
Right.
You're in a rush, so what do? You throw it away.
Mm.
So what I advise is make keeping the receipt as easy as it is to toss it away. And that's where I say get a box.
Mm.
Literally get a box. Get a shoe box, get a pretty box, get an ugly box, whatever you want. And just throw the receipt in there and forget about it. Go on with your life.
Mm.
If it's as easy as throwing it away, you will keep the receipt. And at the end of the year, and that's what I do. I put all my receipts in that one box. I don't think about it. Then the end of the year, I take one day and I add them all up.
Right.
And everything I could possibly deduct is in that one location. And if I've saved enough, often that is the best paying day I've had all year.
Huh. Right. Yeah. So let's say you're keeping these receipts now, which this box system I think is as simple as it is. It's actually super easy. It's it takes the thinking out of it. You can just pile it in there. So that's great.
Exactly.
So how long do you keep these receipts for? Is there a 3-year mark and then that's it, or is it 7 years, or
5 to 6 years?
5 to 6 years.
Yeah.
Okay, great.
Yeah, 5 to 6 years. Yeah, it's the short answer.
Super. No matter how small the amount is, also.
If you used it on the tax return,
right,
and keep the actual receipt. Because if you ever get audited, you're going to have to go in there with those receipts and prove those amounts.
Right.
Okay.
That's fantastic. You'd be surprised how that adds up, all those small amounts. You can shock yourself at the end, like you said.
Oh, it does. It's amazing. And the other mistake that actors make is they will guesstimate what they spent for the year, or they will base it on last year's figures. And very often what happens in that process is that they wind up actually underestimating how much they actually spent on the career.
Right.
So this usually comes out in their favor. The other thing is that it's completely bulletproof in an audit. So if you get a letter from the IRS, your attitude can be like, sure, come get me, please. Right. And while we're in here, there's actually all these other things that I decided not to deduct that I'd like you to give me credit for now as well. We've actually had clients come out with the IRS giving them money back.
Wow.
Because of that. So keep the receipt, throw it in the box, move on with your life.
Right.
It's such a simple thing to do, yet it's so important.
And you're saying that perhaps there were other things that they could deduct, or they felt like they should be able to deduct, but maybe on the preparation form or something there was no way to enter that information. But at the audit time, when you have someone sitting in front of you, you go, "Great, guess what? I'd like to deduct Netflix." But there was no way for me to put that in the form, so I was confused about it. It wasn't user friendly, so I deducted what I did. But now here's the receipt. Here's all the other information I have. You can see that I'm claiming these expenses appropriately. I would like to do this as well. Yeah. Wow. Yeah. That's a great way to leverage that opportunity. See it as an opportunity rather than a detriment, because you've been prepared.
Yeah, exactly.
Wow. Very cool. Okay, great. So now we're in it. Any other great things for actors to keep in mind? Let's say at the end of the year when they're doing all this tallying, things that they often overlook, whether it's Netflix or whether it's, clothing donations or something like that, where they can have the opportunity to save themselves money?
Well, first of all, it's not really an end of the year thing. If you're waiting to the end of the year, you've missed the boat somewhat. Right. Tax time really is all year long. It's keeping track of those records. And it's not just the deductions, it's keeping track of the money that you earned and where it came from. A lot of problems that we see are actors who don't keep track of who paid them and how much they got paid for it. And so when you're acting for a while and you start getting residuals, you're working commercial, you're working TV, you're working theater, you might have 13 W-2s.
Yes.
And Suppose one of those doesn't arrive in your mailbox.
Mm-hmm.
You file your returns based on 12 W-2s, and then 2 months later, you get a nice letter from the IRS saying, hey, we missed one.
Mm.
And then you get a whole, then you got to deal with that. So the other thing is keep track of your earnings, where you made it, and who paid you. And the other reason you want to start doing that is often not only can a W-2 go missing or a 1099 go missing, but the amounts can be wrong.
Right.
Often you might find that you are missing a check. There's actually something at SAG-AFTRA called the Missing Actors Fund.
That's right. Yeah. The Coogan Fund, I think is what it's called.
No, that's actually...
Oh, that's the young one.
That's the child.
Right.
Yeah,
right.
that's the child one. But this is the
states
Missing
do this
Actors.
too, and cities do this too.
Yeah, exactly. States and cities do this as well.
Claim your missing funds.
Exactly. And it's not uncommon to have a residuals check go missing because it didn't get delivered properly. And if SAG sends it a check to the wrong address or it gets sent back, they stop sending altogether and they wait for you to contact them because they don't want these checks floating out there. Yeah. And the other thing too is that sometimes your employer may have played fast and loose with the numbers on their end. Mm-hmm. I see this a lot in restaurants where an employer will take taxes out of your paycheck on your behalf and then will not forward them to the government. They'll pocket the extra money.
Right. There's
no way for you to know that unless you're actually keeping track of those earnings and adding up those pay stubs. Mm. So that's really important to keep track of.
It is.
What else do we hear? What else do you want to know?
Well, let's see. So, checklist so we can access. Oh yeah. Okay. So Dominic, are there resources out there? Yourself is obviously an exceptional resource, but are there resources through the unions, let's say SAG-AFTRA or even Equity, that actors can have access to help them understand their taxes?
Yeah, as far as understanding the taxes, Equity, SAG Foundation, and the Actors Fund all offer tax workshops throughout the year. So you'll be seeing those coming up. I speak at a number of those venues as well, where really? I give a longer, I give like a longer 2-hour in-depth breakdown of how this works. So that's probably the best resource out there, I think.
Absolutely.
There's no book on it, so to speak.
Right. So that being said, have you seen some trends, let's say, over the past 5 years to where we are now, and then perhaps some opportunities in the next 5 years for how taxes incorporate the artist and specifically the actor as the artist?
Can you repeat that? You broke up a couple times in there.
So are there any trends that you see perhaps in the next 5 years that actors should be aware of that they may be able to leverage when it comes to tax time?
I have first of all, knowing what's going to come in 5 years, I have no idea what Congress is going to do. Right, so your guess is as good as mine. What I can talk about is different trends I'm seeing among actors themselves and how they're going about their business. One is we're seeing a lot of actors who are self-producing now, either by doing a short film or producing a play. And very often when they start to produce, they form an LLC or a limited liability corporation. And you ask them why, and they say, well, my friend who produced did this as well. Or an attorney I know told me to do that. An LLC, if you're producing this one project, is typically not the best way to go. An LLC is expensive to set up. And to be set up properly. So there are attorney fees involved with that. Might be the reason why there are attorneys who specialize in this, and you pay for that. And then the LLC itself has to have its own separate tax return at tax time,
right?
Which is often double the cost of your personal return. And then after the project is done, you then have to go and shut the whole thing down. If you keep it open, even if you don't produce, you still have to pay filing fees and the tax return fees, and it can become a real headache. So what I tell people who are self-producing is get a DBA, or known as a doing business as license, and you'll save yourself a lot of time, money, and headache. It costs about $100 to set it up, and it's real simple. And then you just buy production insurance for the project.
Really? And so then when it comes to filing, how are you filing that, and how is the cost compared to your individual return?
The DBA would be filed on a form Schedule C, which is basically one extra piece of paper that's added to your own personal tax return.
Oh, super. So pretty streamlined, it sounds like.
Yeah.
Wow.
Yeah, and it's a very much simpler and a lot cheaper.
Now, are you changing that DBA per project, or can you set up a DBA that is sort of an umbrella doing business as for?
You could do an umbrella,
projects?
like, yeah, if you have like a, say you have a Mike's Theater Company,
right?
You could set it up as Mike's Theater Company, and every year Mike's Theater Company does a different show, and you could leave it at that. Or you could set it up in the name of the show.
And then you would have to make sure you close it when that project is no longer.
You don't have to close the DBA. No, the DBA can just stay open.
Another advantage.
And it doesn't cost you a dime to keep it open. It's just there. A DBA simply allows you to open up a bank account in the name of the production.
Right.
So people
and your insurance
can write checks
account or anything else, right? Keep all that stuff.
Exactly. Yeah.
Yeah. Okay. Yeah. That's good to know. I had some minimal understanding of these two things and how they were different, but I didn't realize the advantages that you just laid out. So that's great.
Yeah. And that said too, if you are doing these separate projects, or if you do have a separate business, keep a separate account. Open up a separate account for a bank account, get a separate credit card for it.
Right.
It's going to keep things on your end a lot simpler. And also it's going to allow you to see basically how that project did in and of itself, money-wise, at the end of the year.
Yeah, you can quantify your expenses a lot easier.
Yeah.
And then when it comes time to claim, let's say, or file these expenses for the way that you were doing business as your DBA, and then also your individual stuff, is there crossover in terms of writing things off, or do you want to be very clear about, okay, anytime I'm doing something for myself as an actor, that has to be just me. I can't get that on the DBA account as well and somehow have that as an expense that I can write off for that filing?
The way that the basic concept works is you are allowed to write off expenses against specific income.
Mm-hmm.
So if you have, if you're an actor and you have acting expenses, you take classes, you go to drum bookshop, you see plays, you can write those expenses off against your acting income.
Right.
If you have a separate side business making widgets, and you pay for your tools and your equipment, you can write those tools and equipment off against the widget income. You have to keep them separate.
Mm-hmm.
Now, where things start to get complicated is that you can be paid for either of these jobs in different ways. You can be paid either as an employee or as an independent contractor.
Mm-hmm.
And depending upon how someone pays you, depends on where those income and expenses get reported on the tax return.
Mm.
That can get further complicated if you get paid in two different methods for the same type of work.
Mm.
So an actor who is working a non-union film where they pay them on a 1099 or as an independent contractor or cash income,
right,
and is also working on union projects in the theater, is going to be earning money in two different ways from basically doing the same thing.
Right.
And that's where things get complicated. So, and that's where it gets kind of dangerous when actors try and figure this out for themselves on TurboTax. Because, the thing, TurboTax is, and the other softwares are great for people who have simpler situations that remain the same year to year.
Right.
Actors earn their income differently year to year. How you get paid changes year to year. What you spend on your various careers changes every year. Therefore, your tax return is going to be dramatically different from year to year.
Right.
I've had some actors say, well, I kind of figured out how it worked last year, so I'm just going to transfer the numbers over to the next year. You can't. It's your profiles as a taxpayer can change dramatically from one year to the next, and that's where things get a little bit hard. The other thing to beware of with software is that it will allow you to put in almost anything, whereas a human being will actually sit there opposite you and question the logic of that. We have to take this and make it make sense to the IRS,
right?
So that you're getting the maximum deductions possible in the way we enter it in the forms,
right?
And also that we're doing it in a way that's not inviting an audit,
right?
And then if you do get audited, we can actually go into the IRS and explain it to them and have them and come through victorious.
Right. Absolutely.
So the way I describe what actors need to look at this is it's similar to if you took a car, if you're a car owner, you wouldn't simply take your car to the mechanic and hand them the credit card and say, hey, just do whatever needs to be done and I'll sign for it at the end, and I don't need to know what you did, just replace whatever you think needs to be replaced and we'll be good. That's the equivalent of taking all your receipts and your income and just sort of dropping it off on your tax preparer's desk and saying, figure it out and I'll sign for it later.
Right.
The opposite end of that spectrum is saying, you know what? I read this book on cars, and so I'm going to go in. It's an old car, so I think I'm going to rebuild the engine. I've never been a mechanic before, but I've heard on this model that I can sort of do it this way. And I know that the book I read was based on a model 10 years prior, but it's sort of the same thing. So that's not the best way to go either.
Right.
What I advocate is knowing enough so that you can communicate effectively with whomever you're working with. And also that you can judge what kind of job they're doing. So, if you were to take your car to a mechanic and say, I think there's something wrong with the alternator, I think the timing might be off, and I'm getting a lot of noise from the muffler. And they come back and say, well, the alternator actually might be good, but the timing might be due to a bad spark plug. So let me check that first. That's a cheaper option. And, and we'll take a look at the muffler, and you should feel pretty good about that. If, however, you go to pick up the car and they say, so we took care of that, we took care of this, and we also put it in a flux capacitor.
Right.
So it's going to run great. Something in your mind should put up a red flag and say, hold on, what's going on here?
Right. That might be unnecessary.
That might be unnecessary. That might be dangerous.
Right.
And that's, and so I think that you should know enough about how taxes work to at least be able to suss that out.
Yeah, absolutely.
The tax, the thing that's tricky about taxes and actors' taxes is in most cases that actors' taxes are too complex to try and do on your own. Mm-hmm. The other thing that is difficult is that the whole business of tax preparation is largely unregulated these days. Mm. Up till recently, there were only this was not regulated on a federal level. This was regulated state by state, and there was only 2 states in the country that had any type of substantial continuing education requirements, bonding requirements, ethics requirements in place, and that was California and Oregon. Hmm. And that's where I started my business as a tax preparer, was in California. So I became licensed in California. Eventually, the IRS said, you know what? There is so much funky business going on with tax returns that we want to weed out the bad preparers from the good ones and make sure that the good ones are continuing to get better. So let's take what they did in California. We're going to roll it out on a national model, and everyone in the country who does tax preparation for professionally will have to abide by these regulations. Well, they got sued and they lost. So it's still, unfortunately, largely regulated. New York has recently taken steps to do some basic regulations, but they're not very strenuous. So I have a New York license, but I maintain the California one as well, because that's the more stringent one.
Right, it's the gold standard.
It is right now. And also just basically because that's where my clients are in those two cities. So it behooves me to stay on top of what's going on in those two states specifically. But what this all comes down to is that it is, no matter how you get your taxes done, whether you do it on the IRS website, whether you decide to try it on your own, whether you hand a big stack of papers off to someone else, it's your signature going on that document.
Right.
That is your contract with the government. You are 100% responsible for anything contained in that return, no matter who helps you.
Yes.
So you should understand what you're signing.
Yeah, absolutely. So what are some red flags, in your opinion, if you're working with somebody, if you've taken on that relationship, what are some red flags that you're probably not getting the preparation you deserve, let's say?
One is if they don't have a what's called a PTIN, that's called a tax preparer identification number.
Okay.
And that's a little number that you'll see at the bottom of the form, right below your signature. There's an area for the paid preparer to sign, and there's a number for their PTIN, a space for the PTIN number. If they don't want to sign that or don't have a number there, you should run, not walk.
Right.
Okay, that's a big red flag. Another one is if they are not asking for real numbers. If they're just asking you to sort of guesstimate, well, what do you think you spend on this? Or just they're not using real hard numbers. Okay. And the other thing is if it seems too good to be true, it is too good to be true. And people ask, well, why? What's the incentive for a tax professional to do the return improperly? The main financial incentive
client and
is
therefore more money.
Exactly. Happy client goes out and they tell all their friends, and suddenly they get all these new clients in the door.
Right.
And very often the audit trails the actual tax return by about 3 years, 2 to 3 years. So by the time you get a letter in the mail, where are they? What happened? So if you're getting a weird gut feeling about a place, you should listen to that. The other thing to keep in mind is that you not only want someone that you can trust, you want someone that understands your business.
Yeah, and so therein lies the rub for actors, right? Which is why I bring you on the show, which is why I think your information is so valuable. No matter how abrasive sometimes we as artists can find, this topic, I think your perspective is fantastic because you understand why it's abrasive to an artist, why, how to think about it in a way that is helpful for the artist and how they go about their craft and their business. And so you're able to bring those two worlds together and say, okay, now how do we make this the most efficient and the most personally productive for you?
Exactly. How do we make this productive for you? How do we put this picture into the IRS forms in a way that's going to sail through their computers, hopefully with never touching human hands?
Right.
And if it is questioned, how do we then go to the IRS and explain it?
And so
because the IRS,
go ahead.
The IRS's job is not to understand our business. Our job is to explain it to them. I was in an audit recently where a woman who had been doing her taxes on her own for several years. She was very active in the arts, ran a theater company, was an actor herself. So she had all her receipts, all her records. She had simply put them in the wrong places on the form.
Oh, okay.
And that's what triggered the audit.
Sure.
And so then we went in for the audit. This auditor did not understand the tax business at all. He actually picked up one of her business receipts that was for a business meeting she was having after a show that she was producing with the writer. And after previews, they would go out because they had to get out of the theater, so they'd go someplace to a cafe and go over notes for changes, and that's a legitimate business meeting.
Right.
The auditor picked up that one receipt and said, "This receipt is time stamped 11 o'clock at night. Who has business meetings at 11 o'clock at night?" You see what I mean?
Well, exactly. Turns out that this business operates at night.
Exactly. we had another, when I was in LA, we had one client who had been on a tour with cats. And this was a tour where the production company did not supply the cat makeup. So this guy was buying all his own cat makeup. And it was expensive, and he wrote that off.
Sure.
And he had the pleasure of being audited in Kansas. And the auditor said, "You can't write off your makeup," which is true if it's personal. However, this was a business expense. And he said, no, this is not for me. This is for when I do the show, Cats. And the auditor said, "Makeup." "No, sir. I'm an actor playing a cat, and I need cat makeup, and that's what it's for. Men don't wear makeup."
Right.
So you can see what you can be up against sometimes.
Right.
So it's important that both you as the actor and whoever might be helping you understand the ins and outs of that business and how it directly applies to the IRS code, so it can be properly translated.
Yeah, absolutely. Hey, actor CEOs, Mike Moreno here. I hope you're enjoying this episode of the podcast. I just want to take a second to remind you to sign up for our newsletter at actorceo.com/newsletter. When you do, you'll get exclusive content delivered to your inbox on Monday alongside the episode release. It's a great way to add tools to your arsenal like an audition scene database, video tutorials with guests, deals on business cards and headshots, and many more that are only offered in the newsletter. Take your career to the next level and sign up at actorceo.com/newsletter. Now back to the show. So, Dominic, I mean, this is, what this podcast is all about, treating yourself like a business, getting a better understanding of how to merge both the craft that you have and that you work so hard to get out there, but also create a sustainable entrepreneurial business out of, and take responsibility for that side as well, and make it the best it can be. Again, stuff we're not taught in school, like we spoke about at the top. But is there a piece of advice, or is there a mantra that you found really useful for you, or you've seen work for others in terms of treating your career like a business, or about the business of acting?
A mantra.
Or, a helpful piece of advice.
I would say this, you should take yourself seriously when it comes to this.
Yeah.
Most actors take themselves very seriously as artists.
Right.
But they don't when it comes to the business side. They feel either shy from it or incapable of it. And that's what's the most difficult to see, because these are actually the people who are the most capable.
Yes.
So my advice is to stay on the front foot. Stay proactive about it. Get a budget.
Yeah. Mint.
Start tracking your spending.
Yeah.
Mint.com, you need a budget.
Yeah.
Try a reverse budget, where you're paying yourself a paycheck every month.
Right.
There are many different ways to do that. And once you start doing that, I really believe that carries over into other areas of your life.
Yeah, absolutely. Absolutely. I mean, I have the opportunity of talking to a lot of people on the podcast and even in other, networking events or things like that. And I meet a lot of entrepreneurs. And I very much feel that an actor is an entrepreneur. We're just never taught to think about it that way. And
Yeah.
when you speak to people who are running their own business or multiple businesses, but are the CEO of that business, are in control of that entity, they take very seriously the fact that they are a business and what that means in terms of the world, whether it's taxes, whether it's, advantages in terms of property or something, or, however you operate in the world, they take very seriously that they are a business and they should be getting all of the benefits of that, but do take the responsibility of as well. But actors are never encouraged to think about themselves in that way, and so therefore miss out on a lot of the opportunities that understanding that side can offer.
Yeah.
And it
Yeah.
really helps you have sustainability and perspective and longevity as an artist. I think if you give yourself the benefit of having an understanding on both sides.
Well, the other thing is too is they're depriving themselves of the type of life that can afford.
Yeah.
You have to kind of be an adult for a couple hours a week in approaching this stuff.
Yeah.
Just sit down. And not a couple hours a week, but when it comes to how you set up your finances and how you take it seriously, put the time in. And it doesn't have to take over your life. Like I said, get a box, but just take the receipt, throw it in the box, forget about it.
Right.
Keep the actual paper receipt. Write down where you go. Keep it on your calendar, your log. It takes 2 seconds to put it into your smartphone, so there's no reason you shouldn't have that. Exactly. I got a couple other things should I go down a list here? A few other things that people should keep in mind quickly?
Yeah, of course, please.
Okay. Another big problem I see is people not withholding enough on their income. The withholding is the money that's taken out of each paycheck for taxes. So
Right.
when someone pays you, say they're paying you $1,000, and the check you get is less than that because of the taxes they took out, you're working for an employer. You're an employee-employer relationship, and most people have that often under withheld. Because when you sign up for the biggest mistake most people make is the day they get hired for a job, and they hand you this form called a W-4,
right?
And it just says if you are single and work only one job, put something in here. If you work a second job, put something in here, and then add up these other things. You're supposed to have a number at the bottom, and those numbers total how many personal exemptions you're entitled to.
Correct.
Each person is entitled only to one personal exemption for themselves.
Mm-hmm.
Okay. Now, what I see happening is people come in and they've put down 3, 4 exemptions, sometimes 9 exemptions. And what happens in that case is there's a whole chunk of money that should have been taxed that's not taxed. Mm. Each exemption basically refers to a person. So if you put down a second exemption, they're going to assume that you have a spouse at home who doesn't work. If you put down 3 more exemptions, they're going to assume that you have 3 children.
Right.
And so your employer is going to withhold you based on that information. And then when it comes time to pay the taxes, the IRS looks at that and says, great, so welcome. Where's your spouse? No, don't got a spouse. Where are your 3 kids? No, don't got the 3 kids. Oh boy, you owe a lot more because there's all this money that you have not been withheld on.
Right.
So basically the system is set up such that if you take one exemption, you should pretty much break even year to year. Okay, mm-hmm. You should be withheld pretty much exactly right in theory.
Right.
And where this breaks down, though, the math breaks down is if you have multiple employers. So if you are working several jobs, as many of us actors do,
Right.
you can be properly withheld for each employer properly. But once you add all those together, you're actually in a higher tax bracket.
Mm.
So you can be under withheld overall. Another area to look out for is if you have a job that's paying you in cash or check or
Right.
what we call 1099 or independent contractor
Where there are
income.
no withholdings.
There are no withholdings. You have to make up for that somehow.
Right.
So in those cases, if you have multiple employers or you have significant 1099 income, I would suggest considering putting down 0 exemptions on your W-2. Let them withhold more to offset that.
Right.
And the argument I get back from actors is, well, I can't afford that. I need to live on that money right now. You know, I can't afford to have more withheld.
Then you can't afford the bill when it comes in the end, because it will come.
Exactly. It's going to come in one lump sum.
Right.
And,
Definitely
you know,
won't
the way I, yeah, exactly. And, if I asked you, Mike, right now, could you write me a check for $600 without sweating a little bit?
Yeah.
Your answer would probably be no.
You'd be getting sweat, buddy.
But but if I said, Mike, could you live on $50 less next month?
Yeah.
Probably not a big deal. That's the same exact difference.
Right.
If you don't see the money, you won't spend it. You will learn to live on a little bit less. And what happens is,
but if you're conscious of it, you can try and compensate for that. You'd be like, oh, so that means I need to earn $50 more somewhere else. Not take it out, but like know that it's there and be like, that gives me an opportunity or a motivation to be like, how can I go get 50 more bucks this month?
Or save more, because that next $50 is also going to be taxed. And what happens is when people go home for Thanksgiving, there's and they tell them that they're taking 1 exemption or 0 exemptions. There's usually a well-intentioned male relative, who I like to call Uncle Bob, who says, "Hey, what are you doing that for? You're giving the government a free loan.
Right.
Have them take more. That's your money." And the difference is that Uncle Bob works one job.
Right.
All year long. He goes to the same job 5 days a week with his lunch pail. He comes home. He knows his paycheck is the same every week throughout the year.
Right.
He knows from January 1st what his taxes are going to be at the end of the year. Our lives as artists are simply different, so that doesn't apply. Let them keep some of the money. You will get it all back in a refund. And guess what? When you get that refund, what else can you do with it? Oh my gosh, you can start investing in your retirement.
Yeah.
You can create an emergency fund.
Right.
You can start saving a down payment for a home. You can take a vacation. You can buy new furniture.
Right.
It's painless.
You can do the things that you wanted to do before, spend that money on before, because you get it back, because it is rightfully yours, but you're not infringing. So you still get what you want if you plan it carefully. You can still get what you want, but you're not careless about it, and therefore sacrificing being able to get what you want in the end.
Mm-hmm. Yeah.
Yeah.
The other thing is keep track of your earnings. Keep track of who paid you and how much they paid you.
Right.
So at the end of the year, you can make sure you're getting all your W-2s,
right,
and that you're not missing a check, or that someone wasn't playing fast and loose with the deductions they took out of your check.
Right.
Be honest.
Yep.
Be accurate. Don't guesstimate. Grab a calculator. Actually add up the receipts.
Right.
Open your mail. It's amazing how often I will get a call from someone saying, "Oh my gosh, I have this emergency with the IRS. They need a response by tomorrow." And I say, have them send me the letter, and the letter is something that they got 2 months ago. It's been sitting in a desk drawer. Or worse yet, they call me 2 days after that deadline passed.
Right. Of course.
At which point everyone's hands are tied.
Right.
So if you get a letter from the IRS, open it. Open it. There are usually ways to deal with it, but there are always deadlines in there.
Yes.
So open it right away. Also, if you get something called a correspondence audit, the IRS is using a lot of these now, where they send you this letter and they say, hey, we have selected your return for review. We happen to be over in Utah. So if you wouldn't mind, just copy all your receipts and fill out this paperwork and just mail it over to us, and we'll figure it out and send you a determination. Mm-hmm. That's what's called a correspondence audit. They do not work for actors for the same reasons I illustrated before.
You're not there to argue, to tell them how your business works.
Exactly.
They're just like, send us the information. You're like, okay, and here's the information. And they'll be like, oh, well, yes, we'll decide whether this makes sense or not.
Exactly. And we who
with
do
no
not
frame of reference of what
scale,
it is that you actually do.
Exactly. And so you have the right to request what's called an in-person or field audit. So if you ever get a request for an audit, you say very politely, thank you so much for inquiring. I'd prefer to meet in person. And you have the right to request an in-person audit near where you live or where you work.
That's fantastic information. Again, you know, when I listen to you explain this and you speak about it, it gets me energized about dealing with taxes and about understanding it, because of these little tips that you drop, these advantages that you have as an artist. You get to go in and say, okay, here's the deal. This is why this works, and this is why my business runs the way that it does. And that's how I get this information out there. But there's also a learning opportunity there for you. If it turns out like, okay, I've done my best to explain it, but I now know how to organize my business differently to make sure that I'm getting the most out of it next time. That's a great opportunity. I mean, that's a step forward.
Great. Yeah, and people learn how to grow their businesses that way.
Right.
And to be smart about it and make smart business choices.
Yeah.
It's really empowering. And I have client who comes in the first year where you got to hand them the tissue from the tissue box,
right? Because
they've realized how they've not done it right, and they come in the next year and they're jumping through the roof with joy,
right?
And suddenly they can do all these things. It's incredibly empowering, and I see this happen every year. This pattern, and that's I enjoy seeing that as well.
That's fantastic.
What else can I tell you? Oh, file early. There are the main reason for that is identity theft has skyrocketed in the last 3 years. It has gone through the roof. And the main form of identity theft is someone gets a hold of your social security number and files the return before you do. They file it for a refund. They get the refund. And then when you go, you try to file, it gets sent back to you saying, we already have a return filed for this number. We can't accept this. Then you have to go through this whole process of getting that fixed with the IRS, and that can take upwards of a year.
Right.
Okay, so file early. The other reason for that is if you file early and you realize that you do have a balance due, that balance is not due until April 15th.
Yeah, there you go.
So you have more time to come up, exactly, figure out how you're going to pay it. The other thing that I see a lot is gym memberships. Gym memberships are never deductible. You have a lot of actors write that off because they had a tax preparer, someone somewhere who told them that at one point.
Right.
They're not deductible. Firemen and cops can't write them off either. So neither can we.
The only thing that something like that is useful for is perhaps lowering your health insurance payment.
Yeah, exactly. And
but as far as taxes are concerned, that is not something that applies.
It does not apply. The other thing that you cannot write off are your audition clothes.
Right.
There are a lot of agents out there and preparers who will say, well, if you have the separate, I'm going to send you in for a lot of professional types. So I want you to have a couple suits, and if you use them only for auditions, you can write that off as an expense.
Right.
Totally deductible. Completely wrong. The rule regarding clothing is if it can be regarded as streetwear, it is streetwear.
Right.
And streetwear is never deductible. Only costumes are deductible.
Right.
And then the actor says, whoa, hold on. I would never wear that suit if I didn't have to. I'm only wearing it because I'm going in for the role of an attorney or a doctor.
Right.
And the IRS comes back and says, well, guess what? The actual attorney and the actual doctor wouldn't wear the suit if they didn't have to either.
Right.
So it's so because they don't get to deduct it, neither do you.
Right.
So, what I say is that, so I say, look, did you buy a gorilla costume? Go ahead and take it.
Right.
But if it can be regarded as streetwear, even if it's not your particular choice of streetwear, it's streetwear. It's not deductible. And we get the same thing also for hair, makeup, and nails. There is no maintenance expense for that.
Right.
And where I get pushback here is from models a lot who say, well, no, hold on. I need to have my hair colored this way. I need to have my nails done this way because I get more work when I look this way. And the IRS response to that is, well, so does the salesperson, so does the banker, so does the attorney.
This is the cost of doing business.
Everyone does better when they groom themselves nicely,
right,
and they look nicely. So that you do not get to write that off. You can only write it off if it's a specific requirement for a specific job. So, like you book an independent film and they say, we need you to dye your hair at your cost for this role, then you can write off that cost for that, if you're tying it to that work specifically.
But and if that's true, then it might be best of you to reach out to them and say, great, can I just get that in writing? And I will...
Exactly. Yes.
Keep that and the receipt together, and then that way I can prove that this was a legitimate expense.
Exactly. Because they'll ask for that. The other thing that I hear a lot is something about the number 600.
What? Oh, for 1099s.
Yeah. What you hear is that if someone paid me $600 or less, I don't need to report that income. That's completely wrong.
Oh no, that's definitely wrong.
Yeah, and you know that, but
it's the minimum mark for them to that if you make that or under, they don't need to file for your taxes. They don't need to take care of that.
They're not required to send you the form.
Right.
You still are required to report that income. And some people say, well,
because they're reporting it. That's the thing. They're saying, this is an expense on our part, so we are reporting this to the IRS saying we paid this money out.
Exactly. And whether or not you get the form, you're still required to report that income. And just because you didn't get the form doesn't mean that they didn't send it. Could be you just didn't get it. Meanwhile, the IRS is getting their copy.
Right.
And when you file and it doesn't match, we've got a problem.
Right. Man, these are great. I love that we're running down this list. These are all fantastic things to keep in mind. Great tips. Any other gems?
God, what else? Keep separate bank accounts. Also, start investing. Is the other thing is that once I get clients into refund territory, I say you need to think about investing in your retirement.
Absolutely, because no one else is going to do it for you.
No one else is going to do it for you, and a lot of the pushback you get from that is, well, you know what? I'm not making a whole lot of money now. I'll invest later when I'm earning more. And what they don't understand is the value of the compounding.
Yeah, it doesn't. However little you can put in right now, that will become more later.
It was and exponentially more.
Yeah, right.
Someone who invests for 5 years in their early 20s and never touches those accounts again for the rest of their life will be on par or often better than someone who waits till 35 and contributes for 20 years.
Right.
It's basically compounding. Essentially, is the if people aren't familiar with that term, it's eventually it's a snowball effect. Right. In other words, you start with a little snowball, and as you roll it, you take one revolution down down the hill, and eventually, and it's bigger. So with every subsequent revolution, it's picking up more and more and more, and suddenly the growth is growing upon growth.
Right.
And that is that concept is so crucial in investing. The earlier you can start, the better.
Yeah, absolutely. I'm looking to bring on a financial planner on this show as well, to start having more of these conversations, because I think if I had known that information, and I was given this information very early on when I, ended up having to settle a car accident case, and I received funds from that because I was the one who was hit, and someone told me that the lawyer actually who was handling it all, he said, I suggest you invest in a Roth IRA with this money because you don't need it right now.
Yeah,
you don't
exactly.
need it. And it's not a terribly large and amazing amount of money that's going to change your life. It's not. You're going to spend it. But if you put it away right now, you'll always have that there growing for you. And so that was some of the best advice I think I've ever gotten in my life, and certainly as a young artist at the time. But even with the financial crisis that has happened since, I've done that, at least it's still there. It didn't wipe me out completely, but it's still there. And so I always have that sitting there, slowly growing over time. Whatever cataclysms may come, at least there's something there, and it doesn't get wiped away in a year. It doesn't, I don't spend it. It's something that I can contribute to also.
And that's going to help you sleep better at night.
Yeah.
And more importantly, help make you feel okay about continuing to do the thing that you love to do.
Yes.
So many times I see artists who get out of the business because they say, I can't afford to do this anymore.
Right.
I don't have security. I can't support my child, and this happens. These are means by which you can stay in the game. And even if you leave the business, just in general, be able to have choices, to be able to do what you want to do.
Right.
And it's these decisions that enable that later on. So it's important and it's empowering. Say, look, there are so many things as an artist that are utterly out of your control.
Yes.
This is something that's not. It's math. It's simple steps now that will pay off dramatically later, guaranteed.
Yeah.
So this is something that you should take joy and take pride and say, oh my gosh, this is one thing where, there's so much about acting where the effort that you put in rarely equals the output.
Well
and this
said.
is reverse. This is reverse. Basic financial competency is an area where you put in a little bit of effort and you can get great rewards down the line.
Man, so true. And again, there are other worlds of training that you go through in school or in some other sort of system that you get taught these things because that is how you survive in this business, whatever that is that you choose to go into. But artists are not taught that. We aren't giving that information and that perspective. And it's so important to come back to because it's available to everybody. You have these opportunities as a person working here in the United States. You have these opportunities too. But no one's telling you about them because when you chose this path, we chose to focus on other things in order to get you there to a place where you could be competitive in the marketplace, but at the cost of not learning how to be sustainable.
Yeah.
Yeah. And that's it's too bad, and there needs to be more education about it. So we're doing our little part, my friend.
Yes, we are.
We're trying. Oh, Dominic, I appreciate it so much for you coming on and sharing your experience and your certainly your perspective, but just your vast knowledge on something that often too many artists are way too ignorant in. So I appreciate you breaking it down and giving us a chance to understand it and help ourselves.
My pleasure.
Find all the resources mentioned in this episode in the show notes at actorceo.com/27.
Thanks for listening. Subscribe to the Actor CEO podcast on iTunes and at actorceo.com.